Hey, it's Vinny. So Home Depot reported their Q1 2023 earnings. Now, there were a lot of interesting insights that we got. Some little nuggets regarding, homes and how it relates to the broader economy. And I'll also share whether I plan to add Home Depot stock to my portfolio. I also published an article over on Substack. If reading's your thing, you can check that out. I'll link that in the description below. So let's look at the numbers really quick, and then we'll go over some highlights of what management said and a quick analysis of Home Depot stock at the end. They spent $900 million in Q1 on CapEx, capital expenditures. They paid out $2.1 billion in dividends and returned about $3 billion to shareholders in the form of share repurchases. So they do continue to buy back stock as well. So management had expected that sales would moderate after we kind of had this boon the last few years from COVID, from staying at home and people spending more money on home improvement. So sales decreased 4.2% for Q1 year over year. As you can see, net sales went from $38.9 billion to $37.2 billion. Now, customer transactions were also down 4.8% from 410 million to 390 million, although the average ticket price actually was slightly up, basically stayed flat from $91.7 to $91.92. After a 3-year period of unprecedented growth for our sector, during which we grew sales by over $47 billion, we expected that fiscal 2023 would be a year of moderation for the home improvement market. Our sales for the quarter were below our expectations, primarily driven by lumber deflation and unfavorable weather, particularly in our Western division, as extreme weather in California disproportionately impacted our results, said Ted Decker, the chair, president, CEO. And they lowered their guidance for 2023. So now they're projecting sales to decline between 2 and 5% compared to 2022, an operating margin rate to be between 14.3 and 14%, and their diluted EPS to decline between 7 and 13%. All right, so let's go over some things I found interesting from the earnings call. So lumber prices decreased significantly. This is following kind of a broad trend with commodities. They were down to $420 per 1,000 board feet. Versus $1,170 in Q1 of last year. So that's good for a 64% decrease. Home Depot's online sales decreased 2.9%, and their big ticket transactions, which are $1,000 or more, also decreased by 6.5% year over year. So consumers are definitely pulling back on big ticket and some discretionary type purchases, which is echoing what we've seen from other industries. Apple, in their earnings report about a month ago, reported their Mac sales declined around 40% year over year. So Home Depot did see some strength in their smaller ticket outdoor projects, some of their more essential divisions. 4 of their 14 departments posted positive comparables. They were building materials, hardware, plumbing, and millwork. So basically just all your essential stuff, while the discretionary categories like patios, grills, flooring, kitchen, and bath continue to see softness compared to the last couple of years, the unprecedented demand that we had there. And they opened 2 new stores in Q1, bringing the total to 2,324. So some interesting statistics on homes and how this plays into Home Depot's hands. So 40% of owner-occupied homes are owned outright, and 90% of households with mortgages hold fixed-rate mortgages of under 5%. And so in the current high interest rate environment we find ourselves, this kind of incentivizes people to stay in place and, lean toward improving their dwelling as opposed to selling their home and buying a new one. So this is kind of a double-edged sword for Home Depot and this home improvement industry, because obviously with high interest rates, you get decreasing home sales, you get cuts on discretionary spending and these big ticket projects. But however, people are spending more time at home and homes are getting older. In fact, the median age of a home in the United States is actually about 40 years old. So home improvement is inevitable as these homes continue to age. So overall, the report was kind of expected, in line with, the home improvement sector kind of reverting back to the mean, and obviously the high interest rate environment we're in, they're trying to kind of break consumer demand. So we're definitely seeing the effects of that. Now I want to look at some stock-specific stuff and tell you guys whether I want to add Home Depot to my portfolio. So obviously Home Depot was a clear COVID winner, but now we're kind of seeing this shift in spending from goods to services, and people are maybe, putting a pause on discretionary type spending. So if we just take a look at Business Quant here, as you can already see, customer transactions on an annual basis have already kind of reverted back to the mean here, and we're getting back to this modest growth. So 2019, 1.62 billion customer transactions, and 2022 was up to 1.67 billion, down from 2020 and 2021, where again you had a big one-off bump. But as you can see, kind of back in line with this modest growth which you would expect for a company of this size. Now, if you look at the average ticket price, that has gone up pretty significantly. In 2022, is up to $90. 2019, it was only $67. So that's been increasing. Obviously, a lot of that has to do with inflation as well, though. Now, I found this really interesting. Home Depot's return on invested capital, or ROIC, is very high. It's sitting at around 34 right now percent, which is industry leading. Compare that to Lowe's, only about 23%. And you can just see over the past few years, 2019 40%, 2020 36%, 21 and 22 32 and 35%. This is a good site. I recently read this book called 100 Baggers by Christopher Mayer, which I highly recommend. Really good book. And essentially, this is one of the few important metrics that he outlined that kind of helps you track how efficient a company is. And if a company possesses a high growth rate and they're able to reinvest at a high rate of return, you may have the makings of a stock with the potential to 100x. So obviously Home Depot, they lack that growth aspect, being a more mature, older company. But it was interesting to see they're very efficient. They've got a high ROIC, which is good. Now, Home Depot also talked a little bit about some new innovations they've been adding, which they're going to touch more on at an upcoming investor conference in a few days. And one of those initiatives is called Sidekick. So this is really interesting. They rolled out this new homegrown app developed to help store associates prioritize tasks more effectively. The app is called Sidekick. Powered by machine learning, the app guides associates to prioritize the highest demand product, which shelf to restock, and the location of the excess product on overhead shelves. Sidekick saves time and increases productivity for associates by leveraging a cloud-enabled ML algorithm to determine which tasks are actionable and when they should be completed, utilizing machine vision to detect and fill out-of-stock products, as well as to locate products in stores. It also alerts specific associates which tasks need to be completed first via a common tasking engine, as well as showcasing where and how to complete a task in a dashboard with associate and manager views, and integrating with other platforms to ensure all data and task prioritization is up to date and aligned with broader business needs. The first step to customer service is being in stock with the right product that's easy to locate. Equipping our associates with innovative technology is one key factor in delivering on that initiative. Sidekick is the perfect addition to HD phones because it utilizes a data-driven approach to help our associates prioritize which tasks will benefit our customers the most. Obviously, a huge part of Home Depot's value proposition is customer-focused and just delivering the highest amount of value to them. And this is just another way that they intend to do that. So I'll let you read the rest of this if you think that's interesting. And made me think of another company that I'm invested in called Symbotic. They're basically automating warehouses. But this is the kind of stuff that is key to stay competitive, to stay at the forefront. And additionally, Home Depot also mentioned they've had a great improvement, their greatest improvement year over year in their attrition rates amongst employees. They cited they've made a major investment of around $1 billion in their employees. So that's obviously key, and that also contributes to this high ROIC, this efficiency that you get when you really do take the time to invest back into your business and continue to innovate. So this is the type of stuff that's pivotal to running an efficient operation when it comes to a store just in massive size like Home Depot that's just ginormous. You've got so many different products and trying to restock all those shelves in a quick and efficient manner. Now, some other interesting insights here. So Home Depot, obviously an industry leader. They've got their competitors, their peers beat in just about every metric. And of course, you're going to pay a premium for that. But you can just take a look at some of the metrics here. PE 17. The dividend has actually been growing pretty substantially. They've grown the dividend over the past 5 years. The dividend growth rate was 16.4%. The payout ratio on the dividend, 45%. So plenty of room to grow it. However, their free cash flow dividend payout ratio is up to 69.3%. So that's definitely something to keep an eye on. But again, just industry leading everywhere you look here. So there was a time I would have considered Home Depot an essential addition to my dividend portfolio. But, Home Depot and Lowe's are a duopoly for now. However, I do worry about Amazon continuing to eat into their sales over time. In fact, I'd much rather own Amazon for a multitude of reasons, which I'm going to get into in a future video. Amazon's on my watch list. Home improvement is a cyclical niche. It's vulnerable to everything from changing trends to interest rates to the seasons and bad weather, as we saw in this report. So, due to these reasons, if I want dividends these days, I lean more toward the stability of ETFs like VYM and SCHD, which I've made videos on in the past, and I'll link those at the end of the video here. And Home Depot is actually a holding within those ETFs. So I've discussed these ETFs in a previous video, which I'll also link to. So I think if I were to buy, something in the dividend realm, I'd stick to those ETFs for now. So if you enjoyed this video, please don't forget to like and subscribe. This is Vinny from the Investment Club, and I'll see you next time.